Maverick traders, welcome out to your market roundup for January 6th. Corey here with you. We're going to take a look at meaningful news. We're going to talk about sector rotations. We're going to highlight our very best bull, bear, sideways setups as we see them.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So today was kind of a microcosm of things that we've been seeing. I mean, it's one of those things where the large cap tech, some of those key sectors, some of those key stocks continue to perform, and they did more of that today. I mean, Google up big, Nvidia up big, Meta, formerly called Facebook, up big. So the S&P was up 0.5%. IWM, the Russell 2000, actually bounced back. It was the best grouping, up 1.2. So that was promising. I mean, we certainly haven't seen widespread rallies. Oil, gold flat on the day. So market led by tech bounced back, and the semiconductors led that rally. Are new highs coming? Well, we're right in the middle of a trading range, and whichever way we break probably is the path of least resistance. So that very well might be a break to new highs. Advanced decline line, you can see it was about half and half. Half of stocks going up today, half of stocks going down. The 50-period moving average is more bearish, with only 1 out of every 3 stocks in an uptrend, 2/3 of stocks in a downward trend. So let's take a look at the chart here of the S&P, and this is how I would look at this. A series of lower highs. So if we were to cast a trend line off of these peaks, it would look something like that, and a series of higher lows or even equal lows, something along those lines. So if you went back further, you could kind of argue this might be even a symmetrical triangle, but this is how it looks to me. We've established a support level, we bounced sharply. We retest the support level, it's a weaker bounce. We retest the support level again, and it's still a weaker bounce. That's what we call a descending triangle, right? So it's like a ball bouncing. If you drop a ball on the table, first bounce is big, every subsequent bounce is smaller. Well, we're on the cusp, but you'd also have to give the bulls some, benefit of the doubt in that, hey, we're at least testing those highs and the upper end of this range again. What are you going to do if the market breaks sharply this way and we take off to the upside? Well, you have to be bullish. There's just no other choice in essence. You can sit there and argue with the wall and say that it doesn't make sense and the Fed this and the debt that, and you can kind of argue the point all you want, but ultimately the market dictates your profitability, and we might break to the upside. I would still anticipate in a descending triangle that those lower highs give way and eventually the floor breaks, right? And we pierce this level and we test lower prices. We've been looking at some seasonality indicators like the Santa Claus effect. The Santa Claus rally is that week right after Christmas into the new year. And the old saying, if Santa Claus fails to call, bears come to Broaden Wall, meaning, again, it's more of a bearish market. Well, Santa Claus failed to call. It was a bad week. The January barometer is basically how you do in January really dictates the rest of the year for the most part. I mean, if you have a poor January, usually the market finishes negative on the year. If you have a positive January, almost always the market finishes positive. So it's not perfect, but it's a good barometer. And right now, some of these things are a little bit more on the negative side. So again, I'd still anticipate that we're probably going to go down and test those lows and quite possibly break those lows. Here again, as you look at the NASDAQ, you kind of have those lower highs. This is still a lower high than this high, which is lower than that high, but we could be on the cusp of a break. Not out of the question that takes place. Could happen. Again, the semiconductor sector really in the green. Communication services, Google, Facebook, really in the green. There's a lot of red spread out here. Certainly a lot of stocks, utilities took it bad, real estate got hit hard. Some of these consumer defensives, especially the beverage makers, Coke, Pepsi up there, there was definitely some red spread out, but the biggest names were green, and that tends to move the equity, well, the indexes at least, let's say. On the bullish side, I'm trying to highlight, Boeing and Disney would both be what I would call the weaker annual performers from last year that are still in an uptrend. So that's the play that, I'm not super aggressive with these, but I'm looking to buy them. I don't have a bullish position on in Boeing, but I would be looking at it as a possibility in these pullbacks. On the bearish side, just more go with the flow and uh, trade the trends more than anything. But here's Boeing. The news for Boeing seems to always be bad, but yet the stock's in an uptrend, right? We've got a 2050 crossover, there's upward sloping. Yeah, you're having a little bit of a correction here, a little bull flag, but these oftentimes reverse to the upside. So they'll come after in new years, sometimes the dogs of the Dow, the worst performers from the prior year, and that sort of idea. So I'd still anticipate that Boeing could be a good candidate. For me, I'd want to see some strength. I would almost feel like, even if I felt like I was chasing, if there was a big green candle here, or something, a big pivot reversal to the upside, then I'd be more inclined to buy in. Disney, same idea. Kind of had a rough year, but it's moved into an uptrend. Now, this one has certainly consolidated of late, and we're kind of stuck in this tight range. You could break either way. If, and this is a big if, but if we were to break sharply higher, that would be an intriguing play to me. On the bearish side, I'm not really trying to overthink it too much. Sometimes there is a tendency for weaker performers to be bought, but that one's not quite as good as the other side of, the January effect trade. So Archer Daniels Midland, it looks like it's going to break support here and test new lows down into the 40s. So there's plenty of candidates. We certainly have some bearish things happening within the end of the year. Payrolls come out on Friday, and earnings season kicks off on Friday as well. So Friday should be a good volatility day. You get earnings out of Bank of America, Delta, Wells Fargo. When these financials report earnings, that's really the front uh, signal. It's kind of the starting gate, if you will, for earnings season. So next week and the week after that, there will be a lot more earnings coming up. But Friday, we've got economic news, we've got earnings news. Those are the first big events of 2025. So we'll see how the markets handle that. Hope you enjoyed today's market roundup. Have a great week, everyone. We'll see you next time.